Good morning, everyone. Steve Murray here with Insurance Agency Marketing Services. I want to just take a quick opportunity to get with you all, give you just the down and dirty, quick DOL update, let you know what you need to do June 9th, and do it as concisely and quickly as I can so as not to take up too much of your time. I will open up for questions at the end, and I want you all to keep in mind that the opinions and interpretations are those of the interpreter or those of the presenter, which of course is myself. This is a complicated rule. We're going to do our best to lay it out for you. I don't want this to be interpreted as all the gospel truth about the due update. I don't know who, if anyone, could make that available to you. But so that's my little disclaimer for today. Certainly, you've all have been keeping a little bit of track of what's going on with the DOL. I'm going to give you what it means to you today, or what it means to you more appropriately beginning June 9th. Which is just around the corner. And if you have any questions, I want you to ask them, and I will get them answered as quickly as possible. So what's it all mean? On June 9th, for transactions pertaining to qualified funds, the bottom line is that you're a fiduciary. So what that means is that you have to adhere to impartial conduct standards, disclosure of your duties, disclosure of the commissions, and you need to maintain those documents for 6 years. The biggest part of that probably is that impartial conduct standard. So what that means is that you're giving advice in the best interest of the client, charging only reasonable commission, and not making any misleading statements. So effective June 9th, you're going to be in compliance with the DOL requirement in one of two ways, most likely. One will be through the BIC, and the other will be through the 8424. So you may be wondering, okay, which one is for me? So, and this is general guidelines. So people that will work under the BIC are people that are currently employed by an established financial institution, are currently supervised an established financial institution. What are those currently established financial institutions? And that per the DOL rule, they're banks, insurance companies, broker-dealers, and RIAs. So that'll give you an idea of the folks that are most likely to be affected and use the BIC. 8424, as a general rule, those are going to be folks that are insurance-only licensed. So you're an independent agent, you're not supervised or employed by a financial institution. Likely then you will travel under the 8424 guidelines. If you look at the 8424 and how that is going to be carried out as compared to the BIC, I think this particular slide is kind of apropos, because if you look on the BIC side, you'll see there are kind of two roads, and if you look on the 8424 side, you'll see there are only one road. So let's look at the BICE. So under BICE, you got the same adherence to impartial conduct standards that we just talked about. You are a fiduciary. You have fiduciary documentation. You're supervised, so that documentation will likely be reviewed and approved by a supervisory entity, and then the liability for your actions under that particular exclusion are going to be shared with that financial institution. On the 8424 side, you have the same adherence to impartial conduct standards. You are required to maintain the fiduciary documentation, which we'll talk about shortly. You are self-supervised. So as you look at that road, you see there's kind of just one trail. You're traveling a little bit by yourself. That liability is personal to you. So that liability is not at the insurance company. It's not at your FMO, IMO. It is strictly under 8424, your liability. So that's why we want to take some time here and talk about how to make sure that you maintain and stay in compliance for your benefit. So what now? Advisors in the qualified marketplace are supervised by an established financial institution. They will work under BICE. The day-to-day requirements of your new fiduciary status likely is going to be communicated to you by your financial institution. I'm sure that we'll raise some questions on that, and I'll watch for those pop up and answer those, but that's the general guideline. Advisors in the qualified funds that are not employed or supervised by an established financial institution likely are going to travel under the exclusion to earn commissions, PTE 8424. So you'll need to acknowledge your status and understanding of requirements to the carrier, disclose your status and its requirements to clients, and document your client files appropriately. We're going to talk about that, of course, as well. So covering your bases, this is a nice form that we received from one of the folks, one of the companies that we do business with. I think it's Athene, actually. And so we're going to talk a little bit about file documentation and what your responsibilities are. But generally speaking, your responsibilities under 8424 and under BICE are to go through a process that establishes the need for the particular product that you are recommending to your client in this case, a fixed indexed annuity. And then once that need has been established, establish how you went about selecting the best indexed annuity for the particular client need. And then you want to have that disclosure information in your file, so you want to hold on to that. And this is a really nice worksheet that you can use. It kind of walks you through that process. So we're going to make these available to everybody after the webinar here today. Watch for your email. We'll have a little landing page set up and you can look at this. Again, this is documentation that is required of you to be in compliance, but this particular documentation is not required of you. So you can look at this and say, I like that, or I want to use it and put it in my file so that I can maintain a kind of a record of the process that I went through. The bottom line is that if you look this over, you can kind of see the path that you need to follow, and that's the path that you need to follow, and that's the documentation that you need to have. Do you need to use this form? Absolutely not. This is a nice little document, and this is one of 8 pages of the document that kind of talks about your responsibilities in the new fiduciary world. So you can see here it talks about best interest standard versus a suitability standard, how those vary a little bit. But on the other 7 pages, there's all kinds of little key takeaways, and I recommend this highly. So professionals in the business, and compliance is a big part of what we need to do day in and day out. A lot of you would say, well, I already act in the best interest of my client. I already don't make misleading statements. I think I already receive reasonable commissions. So for a lot of you, the parts of this that are going to be important is going to be that documentation part of it. And hopefully this fiduciary unwound piece that it was put out, I believe, by North American, and we'll make available to you as well, will help describe some of those responsibilities so you can stay in compliance. I threw this form up, and you can see this particular form is an EquiTrust form. So for folks that are working under 8424, many companies are going to somehow ask that you let them know how you're going to maintain compliance with the DOL rule, whether it's under BICE or under 8424. And you can see on this form, it's basically asking you that. And if you are under BICE, then it wants you to name your financial institution on this form. And this form is going to be required on any qualified application that is submitted, for instance, through EquiTrust. Some companies will do it that way. Some companies will amend your agent contract to basically say, hey, you understand your responsibilities and your compliance regimen that you need to go through, and you adhere to that. Some companies might send you out just a blanket form. The blanket form might say basically that as well. I understand what I have to do. I'm going to do it. I'm going to document my file. Because again, remember, under 8424, which is how most companies are going to ask you to be compliant under the DOL rule if you are an insurance-only producer, the responsibility for the compliance is with you. And if you look at the forms that they're going to have you sign, some of that is going to say, you understand that you understand that the company is not sharing in that responsibility, that the responsibility is yours alone. And so keep that in mind. This is a form that I put up here only so that you can kind of see a little bit what some companies might do as far as acknowledgement, and not be confused when you get these types of documents, when you have to fill out these types of documents. So if you're an insurance-only producer, from June 9th, or actually effectively June 10th to January 1, this is likely going to always be checked by you as 8424. So keep that in mind. And certainly if you have any questions about that, give us a call. So this is a sample of disclosure, what has come to be termed an 8424 disclosure. This was actually put together by one of our producers, and it's meant to be a sample only. Remember, companies may make similar form available to you, and 99 times out of 100 that is given to you as a sample of the information that they think that you need to have disclosed and signed off on in your file for your liability coverage. So basically, the companies are saying, hey, it's not our responsibility, it's yours. You need to complete this form if you're an insurance-only producer that says that you understand what your requirements are. And by the way, here's a sample of a form that you may want to put in your file. And you'll notice there are a couple things covered on this. It might be hard for you all to see depending on your computer size. But if you look at through the form, you'll see it gives a little bit of a history on what's going on. It talks about the fact that there's a disclosure required. It talks about fees and charges. It talks about reasonable compensation. It talks about who you're associated with. It talks about any material conflicts. And then it goes through kind of a little bit of the recommendation, and it requires your signature and the signature of the client, and that should be maintained in your file for 6 years. Now, if you wanted to take a form like the first one I showed you earlier, which is kind of the disclosure of the process that you went through that was made available by Athene, and connect that with this and put it in your file, I think you should find yourself to be pretty well covered, certainly in this interim transitional phase between June and January 1. So good form to have a look at. Are you responsible for making your own 8424 form? No, you can pick and choose. You can use one like this. You can look at this one and say there's some things I might want to do different here. Bottom line is you want to cover your bases on that 8424. So, look at a number of the forms out there. There's some requirements. You're going to see them that are on every form. Commission disclosure, for instance, is a requirement that has to be on there. Your disclosure that you're now a fiduciary has got to be on there. So, I would adhere pretty closely to the samples that you see, but it doesn't hurt to put put it in terms that you think are easiest to be understood by your client. Remember, it's your liability, so you want to make sure that what you put in your file for that disclosure is one that you can fall back on and say, okay, not only did I disclose everything I had to, but I did it in a way that is easy for my client to understand. So good information here. If you put one together that's your own, which I kind of recommend, you don't want to have a different form for every company and go through and use their sample form, because remember, it's just a sample form anyway. It's not one that they need back. It goes in your file. So I would just make one so that you have a process that you go through when you print out and do each application, when you have each file. The one thing that I might do is, you can see here, like reasonable compensation, you'll have to input that for each sale that you make. So obviously commissions are different on different type products. If you're selling a SPIA, that might be one. A MIGA might be a different. So you can see here where it discloses compensation. That's something that you may want to make sure it gets put in individually on your form on each one. And if you have any questions on that, or you need more information, or if you'd like some other sample disclosures, by all means, let me know. So commission disclosure, I think that's an area where, for a lot of us, it's a little bit different. We can say, hey, we've always acted in the best interest of our client. I've always told my client, my clients have always known that I've earned commissions. That's all well and true and great. But when we actually go to disclosing exact commissions, I don't know if we've done that in the past. So I think it would be helpful for you to kind of have that conversation, because it's going to be different for you, have that conversation kind of put in place. And so what I did here was put a little let's talk about commissions format together. It had some different analogies and different ways to look at how we earn commissions. And then I put together also just a quick, some basic things that we kind of take for granted, but maybe our clients don't understand about the way that we're paid and why we're paid the way that we're paid. And so I think that's kind of a useful form, or a useful talking points for you, and we'll make that available to you after the webinar as well. So that's something that you have interest in. By all means, give us a call here and let us know. What we did here, and this is something, it's a work in progress every day, because we're still getting from the carriers that we work with, as of today, we're still getting kind of what their processes are going to be. And so what we've tried to do for our internal use is to keep track of it carrier by carrier, so that our new business team kind of knows, hey, what's required with this company, what form is required to be returned, anything unusual about their process. So this is our internal working document. I've had a couple of guys say that would be useful for them to have. So we're going to make that available. You're going to see a big disclosure on the bottom of that, because the requirement to keep that up to date and have it all exact and have no misunderstandings about what's required is, we got to have a little protection there. So please, by all means, use this as a guideline. If you're working, for instance, with a particular carrier and you want to verify, if you don't know for sure, you can look at this form and say, okay, I think what's going on there, but by all means, call us or verify how they do it. This is meant to be a kind of a easy reference chart. Anything that's easy is open to misinterpretation and misinformation. So I want you to use this for what it is, kind of a first blush look. And then when you actually get to where you're at the point of writing business, then go ahead and give us a call and let's get the exact guidelines for you. So I think you'll find that useful, but don't depend on it unequivocally. So what's next? January 1, when the and I do see a lot of questions popping up, so I'm gonna take those here in just a minute. On January 1 of 2018, that's when the full implementation of the rule that was announced back in April of 2016 is supposed to take place. When President Trump said they wanted the DOL to look at it again, the DOL said, okay, we'll do that. But in the meantime, from June 1 to January 1, to protect consumers, we want to have these basic things in place. So what you're seeing right now from June 9th, to January 1, 2016, what I've just described to you is kind of that transitional stuff. In the meantime, the DOL and Labor Secretary Costa is going to be looking at the rule and making sure to, in light of Trump's directive, to reevaluate the rule. So they're going to open it back up to comment. There likely will be some changes in it. I don't know what they will be. Nobody knows what they will be. This has been a moving target pretty much from the get-go, and I don't expect that to change. Anytime we think we know what something's going to be, we're proven wrong. So all I can say there is, do your best to stay tuned. Don't hesitate to write a letter to your congressman and let them know what you think about the rule and what you think is good and bad about it. Everybody wants a consumer protected. There's no doubt about that. But go through more endless and often needless paperwork is no good for anybody. And to open this up to all kinds of frivolous lawsuits for no good reason, that doesn't seem to make sense for our country either. So to pass that information on to a client, or to your congressman or to anybody that you talk to in a position of power, I think is a great idea, because there's going to be changes, and they could become more strict or less strict, or more paperwork or less paperwork, or more exposure or less exposure. If it's like if the guy you voted for or the guy you want to be president didn't get to be president and you didn't vote, you can't say much about it. So I'll participate in the discussion and participate in the process here. I want to take a minute because I do, one of the things that a lot of folks are asking is, do I need to be securities licensed to be in compliance with this ruling? And the answer January 1 is, frankly, we don't know the answer to that right now. And so with that in mind, I wanted to make sure that you're all aware that we have an outlet via IAMS Wealth Management. And it's not just meant to be an outlet for the DOL rule, but rather meant to open up a whole new level of opportunity for you to work with your prospects on their managed money. And we're pretty good. Our basis, where we come from, is kind of an insurance background. So we're pretty good and work with other insurance producers and getting them converted over, helping them through the process of getting licensed, and then helping them understand how to integrate assets under management into their already existing insurance and annuity business. So hopefully you'll give us a shot to look at that business with you. If you have some interest in that, all I want you to do is give us a call and let us know. Ask for Charles Hiring. He can certainly walk you through the IAMS Wealth Management portal and show you what we can do and how we do it, and make that as easy and as trouble-free for you as possible. So now questions, and I apologize. A lot of questions have been popping up, so let's get right to them. So the first one that came up, and maybe was in anticipation of some questions that we answered later, but the question is, will IAMS act as a financial institution? So as it sits right now, FMO, IMO, there were some guidelines laid out early about how an FMO or IMO could be a financial institution, but as far as I know right now, no FMOs or IMOs have applied to, or and certainly none have been approved to be financial institutions. And right now, of course, between June and January, there's absolutely no need for a financial institution during this transitional period. Now, if you are a registered rep, securities license, work at a bank, then you already have a financial institution that you operate under. That's under the BICE. If you don't have a financial institution that you're working with, your insurance-only producer, then you can operate under 8424, and the liability will be on you, but there is no need to have a financial institution sign off. If the question is, will we be a financial institution January 1? I think, as I have always said, as long as the guidelines to be a financial institution are within our reach, IAMS will be a financial institution. Similarly, we've got IAMS Wealth Management that can also act as a financial institution and will do so if that is appropriate at that time. That's the best answer I can give right now to a question that is yet to be decided. But bottom line is that we're in this business to stay. We're going to find ways for you to do business, and if that means that IAMS becomes a financial institution or needs to become a financial institution, or we need to have IAMS Wealth Management act as your financial institution, one way or another, we'll get that covered for you. Good question coming up. So can I just write traditional fixed annuities and avoid all of this? The answer is no. So even under the DOL rule in its initial form, fixed annuities, traditional fixed annuities, were covered under 8424. So you could write traditional fixed annuities under 8424, and as you may remember, fixed index annuities had to be written under BICE. You need a financial institution. During this transitional period, when the department came out with the delay, they said all annuities are going to be handled under either the 8424 or the BICE, depending on which fits for the particular individual. Insurance-only producers, 8424 is the way that you're going to go, whether it's fixed indexed annuities or traditional annuities or SPIAs or MIGAs, whatever product, you're going to be subject to being a fiduciary under 8424, as I've just described. Does this affect non-qualified funds? So as of right now, no, it does not affect the DOL has purview only over qualified funds, and so couldn't make rulings that pertain to non-qualified funds. If you've watched the trades at all, you know that the SEC is weighing in right now. They're going to ask for comments on a fiduciary standard ruling from the SEC. If the SEC does it, of course, they've got purview over all funds, qualified and non-qualified. So if they wade into it, they're going to do what to me seems more sensical, which is that if you're working with a client, whether it's qualified funds or non-qualified funds, you'd have the same responsibilities to act on their best behalf, et cetera, et cetera. So bottom line is that you cannot, this whole thing can't be avoided by just working with traditional fixed products. That's not an option right now. Do I have to be securities licensed to deal with qualified funds? The answer is no. Currently, you do not. Even under the old rule, you did not have to be securities licensed to deal with qualified funds. So the answer to that is no. What happens January 1? Gosh, I wish I could tell you what's going to happen January 1 or if anything's going to happen January 1. I think that based on what we're seeing from the SEC lately, there are going to be two government sectors, departments working on similar things, and who knows how that will go, whether it will end up with some, I can't see them coordinating that at all by January 1, knowing the pace and the complications of this particular issue, the pace of our government and the complications of this particular issue. So that could easily lead to a delay, or the DOL could say, look, we see the SEC is working on it, so we're going to withdraw the rule and let the SEC take over, and then we'll have to see how the SEC wants to deal with it. It may be totally different. So obviously, as of right now, January 1, full compliance is required, but a lot can happen, or a lot is likely to happen here over the next 6 months or so. So will my broker-dealer require forms, and will my comps decrease on fixed indexed annuities? So good question. So if you are operating as a supervised individual under a broker-dealer, and your broker-dealer is drawing indexed annuities through the grid and offering supervision, then they're going to let you know what forms that you need, because remember now they're going to be the supervisory entity for you, and so given that, they may have forms that they require. So, for instance, on the 8424 side, where we say, hey, you've got to put those forms in your files, the companies don't want them back, your BD is likely to create forms, very specific forms, and want those forms returned with any business that you do, whether it's annuity business, variable annuity business, whether it's mutual funds, stocks. Anytime you're dealing with qualified funds, they're likely to want some type of supervisory form or forms in their file. As far as how it will affect your comps, likely you could see your comps now being paid through your broker-dealer, through the grid, if you will, so not directly by the company. And I have seen from a number of broker-dealers, they have required certain comps to be paid and no more or no less being paid. So they're kind of saying, okay, we think this is a reasonable comp, and so we will not pay out any more than this. What's going to happen to that comp? If they say, hey, we think reasonable comp is 6 and a product pays 6.5 or 7, I can't tell you what's going to happen with that additional comp. I guess I would assume at this point it would stay with your broker-dealer unless your broker-dealer makes a special deal with the carriers that issue the plans to decrease the comp. So that kind of gives you a idea of the complicated world that we live in. There are a lot of other questions, but I vowed that I would keep this short. And so what I'm going to ask you all to do is if you watch for an email from me that will have the documents landing page. You can get all these documents. If you have any additional questions, I'd like you to call us at 800-255-5055. Ask for myself. Again, my name is Steve Murray, or ask for any of our sales directors. A lot of what we talked about here, I've tried to go through it quickly, and a lot of it is obviously opinion, and a lot of it is our interpretation of the facts. So I want you to take it as that, and I want you to act on it as that. This is not meant for consumers at all. This is meant for information to our producers to apply guidance, but I can't warrant it to be 100% accurate. So keep that in mind. But if you would like some of the documents, the samples that you can kind of look over, I would recommend particularly that Athene piece that I showed you earlier. It doesn't have Athene's name on it, but it's kind of the process that you want to walk through. I think you'll find that, if nothing else, useful and instructional. I recommend that you take a look at the 8424 disclosure. I think you'll find that certainly helpful as a basic template as to how you might want to have your disclosure. And do not do nothing come June 10th. Actually, don't do anything that would leave you open to a potential compliance issue. And it's not that hard to be in compliance. You need the 8424 disclosure form. You need to have some backup information in your file, which many of you already offer. We may, in the relative short term here, offer you a couple of software tools that you can use that will help with that process and walk through that process for documentation of your file. But the bottom line is, we don't have a big hurdle to jump over here, but don't not jump over it. Make sure that you get some compliance stuff in your file. Enforcement between now and January. Basically, the Department of Labor and the IRS said that they're going to forego enforcement because there's so much that is yet to be understood and yet to be decided about the finality of this rule. That doesn't mean that we should not put the proper documentation in our file. So again, IAMS is here to help any way that we can. We are for our producers. That's our, whatever we do to help you, that's what we're going to do. You're our customer, our number one concern here at IAMS. So let us know how we can help. Number is 800-255-5055. Hopefully this has been quick enough and direct enough that you'll know exactly what to do on June 10th. And if you have any questions on that still, please give us a call any way that we can help. Give us a call here at the office, 800-255-5055. Again, thank you all for joining us, and have a great day.